Student loan debt in the United States has passed into the trillions. But the part that nobody wants to talk about is that student loans don't just affect the students. It burdens entire future generations, including people who never even went to college. And to understand why, we need to strip away politics, emotions, and the promises. Explain all this through the lens of Austrian economics. Because student loan debt is not a market failure. It's a policy failure with consequences that compound over decades. Thank you for watching Bear Economics. I hope you get some value from this video, and if you do, please just like, subscribe, and drop a comment. Alright, let's get into it. Ludwig von Mises emphasized that prices were meant to transmit information because prices tell us a few things. It tells us what is scarce, what has value, and what society is actually willing to pay for it. Student loans destroy all these signals. When the government guarantees student loans, colleges can raise tuition without fear, students can borrow without pricing risk, and degrees become detached from real market demand. That is not capitalism. This is credit expansion, and it's exactly what Austrian economists warn about. Easy money doesn't make education cheaper. It makes it artificially expensive. Mises and Rothbard both argued that cheap credit leads to malinvestment. So malinvestment happens only when money flows into projects that appear profitable only because money is artificially cheap. So these student loans created overbuilt universities, administrative bloat, luxury campuses, and degrees with very little market value. Students weren't irrational. They were just responding to distortive incentives. When credit is cheap and risk is socialized, bad investments multiply. So education became one of the largest malinvestments in modern history. Murray Rothbard really emphasized the unseen costs of intervention. Student debt does a number of things. It delays home ownership, suppresses family formation, it reduces entrepreneurship, and lowers capital accumulation. But these costs don't show up on government balance sheets. They show up in fewer businesses, lower birth rates, slower economic growth, and a less resilient society overall. And then future generations inherit slower growth, higher taxes, and a weaker capital base, even if the loans are forgiven. So debt forgiveness sounds extremely compassionate. But like always, Austrian economics asks the harder question, which is who bears the cost? Because debt doesn't just poof, magically disappear. You can't just wave a wand and just alakazam, like poof, oh, it's gone. Magic happens. The debt doesn't disappear. It's shifted into the taxpayers. It's monetized through inflation and then paid through reduced purchasing power. Rothbard was very clear. There's no such thing as a free lunch. It's not just a saying. It has actual meaning. It's 100% accurate. Someone always pays for it. Even though it's unseen, someone bears the cost of your free lunch. Forgiveness doesn't fix the system. It rewards the distortion that caused the problem. And what's worse is it signals that future borrowing will also be subsidized. In a free market, schools compete on price, degrees align with demand, and risk stays with lenders and borrowers. Bad programs disappear. Government-backed loans remove discipline. When failure is impossible, costs explode. This is why tuition rises faster than inflation. This is why degrees lose their value, and this is why the debt never goes away. The system is not broken. It's working exactly as intended. But there is a solution out there. There is somewhere out there, and it's the Austrian answer, like always. It isn't more funding, it's less distortion. So that means end federal loan guarantees. Restore lender risk. I'm not going to pay for your gender equality studies major. It has no purpose. Let the tuition reflect the market value. Allow bad programs to fail. The F word that there should be a lot more failing. Things should fail because that's a signal that it doesn't work and no one wants to pay for it and it's shit. It's garbage. Let it die and wither away. Expand alternatives, apprenticeships, certifications, and on-the-job training. Let's bring that back. Education should be an investment, not a political promise. Student loan debt isn't just about students. It's about broken price signals, malinvestment, and stolen time from future generations. As Mises taught us, intervention creates consequences, whether we see them or not. And as Rothbard reminds us, you cannot fix a problem caused by intervention with more intervention. Thank you for watching Bear Economics. Please like, subscribe, drop a comment, and I'll see you in the next video.